BlackRock will be the one. It's going to trade the most for sure. But the rest of them, like 5 of them are already in the what I would call upper middle class. And then even like I just saw Valkyrie took in 40 million yesterday. That is a lot. Like everybody's a winner here. But the GLD of Bitcoin is going to be IBIT. I don't have the numbers in front of me. I think Wisdom Tree is probably around 30, 40 million. I mean, you only need about 50 million here to be profitable. And Wisdom Tree is committed to this space. They got a bunch of ETFs in Europe. And then you start going up, everybody's got over 100 million. So they're already in profit zone. Even if they had 10 million, it's only been 2 months. Normally it's a year. So even if you extrapolate Wisdom Tree, they're going to be well over 100 million in a year. So I don't see any of these 9 closing. What I do see happening is a bunch of spaghetti getting thrown at the wall, like 18 different forms of leveraged Bitcoin ETFs, and maybe 3 are successful, 3 are middle class, and like 6 get closed. So I do think there'll be spaghetti thrown at the wall outside of the 9. Some of those will come and go. The 9 are here to stay. None of them are going to close.
With the screaming success of the Bitcoin ETFs, the price of Bitcoin is soaring, reaching newer and newer highs. In a recent discussion, senior ETF Bloomberg analyst Eric Balchunas discussed the Bitcoin exchange-traded funds and explained why everyone is still underestimating the impact they will have on the Bitcoin price. Whilst there was already a lot of hype during the launch of the Bitcoin ETFs, Eric Balchunas admits that these financial instruments have been performing much better than even he had ever imagined. Make sure to stick around to the end of the video where Eric reveals his thoughts on how the rest of the crypto market will be impacted.
I like the folks at Grayscale. They're all very nice. And they're why we're here. Let's salute them for they took it to the SEC and won. But if you have a choices of these products, let's say you're shopping for, I don't know, a new toaster, and one of them was $150 and the rest were $20, and they all kind of did the same thing. I mean, it's just, no normal shopper would pick the 150. And at this point, the other ones are liquid enough. Like one of the case you can make, well, GBTC was more liquid. Well, the other ones are getting plenty liquid. So you're losing a lot of any advantages. So I don't see a lot of new flows coming in. But what is going on is what I call the bull market subsidy. And this is kind of ingenious by Grayscale to foresee this. And I didn't really even think about it, but it's something we see in active mutual funds. If you have $25 billion, which they had, and you see $10 billion in outflows, you'd think, okay, well, they would have 15 billion in assets. But if the Bitcoin price goes up 40%, you actually have the same amount of assets or more. And so if it goes up 100%, so if Grayscale, which I'm sure they're all bullish on Bitcoin, they can afford to lose a ton of customers and assets, and they could still be making a mint through just the fact that Bitcoin went up that much. It's a little mirage-y. The assets are more about just the price of Bitcoin at that point than having actual customers. You'd rather have the customers, but hey, it's still the same revenue. It's the same dollar revenue. So in a way, Grayscale is probably going to be fine and benefit just from starting the race with a big base. And so active mutual funds, when Vanguard came around, they all had hundreds of billions, tens of billions. So when Vanguard started to take the customers away, the stock market went up 2-3-fold. So active mutual funds, like stock picking mutual funds, had 3 trillion 10 years ago. They've seen 2.5 trillion of outflows, yet they have 5-6 trillion today. And that is probably the only business where you can lose customers and make more money. Key to that though is to come in with a big base, and Grayscale had a big base. So yeah. I wouldn't worry about them, but I don't see anybody who's fresh shopping for a Bitcoin ETF would pick GBTC. So these big companies, we know what they do. It's like old news. But when somebody comes from the outside and is able to go wild from this far off area and sort of command the attention and a lot more flows than they're due, it's hard to take your eyes off of it. So I thought that I would be on to other things by now because I thought it's going to settle down and Bitcoin would be 10% of my life. But the second wind has me almost as engaged as during the approval because, again, just as the way I was engaged in other times, something broke through from the outside like this has. I thought it would take longer to have this sort of second wind. The second wind came faster and was more intense than I thought. I think we all expected some hype early, like the first couple days. It was like a pressure valve that was built up for 11 years and it finally released. Of course, there was going to be hoopla and some flows and some volume, and there was. And then it kind of dipped down and I thought, okay, we're going to get to this new normal of maybe 50 to 75 million a day in flows, and maybe an outflow here and there, a little more normal. And GBTC's outflows had actually stabilized. So I thought, okay, we're going to enter this sort of more mild area. And then potentially down the road, as advisors get more interested, there could be a run up. Well, that happened in 2 weeks after I thought that. There was this clear second wave that came in, and not totally clear what caused it. I think it looked like IBIT in particular really was able to get volume. And I don't know if BlackRock's wholesalers were out doing their thing. It looks like they got a lot of asset managers to buy in. Retail has been very present in the ETFs. And so you saw a big run up in flows and volume, especially volume, in the past 2 weeks. That's obviously caused an upward spiral. The flows come in, they have a nice impact on price, and they have a sentimental impact. I call it the ETF effect. If you know these flows are coming and you're not an ETF investor, you're probably going to go, well, this is probably bullish, I'll buy. So it's not just the ETFs lifting the price, there's an effect around it that's positive. And so I think that's what we're seeing. And so I've been in ETFs for about 20 years, and I call this the big come up. There's just certain times where something has its moment where it just rises quickly. Sometimes it's almost like a mania. ARK was probably the last one where the flows come fast and furious, the volume hits, and basically you get some FOMO, and that actually helps the price of the underlying go up too. And I think we're in that moment. I think it only happens once. After there's a long decline or a bear market, it's tough to have that feeling again. Bitcoin ETFs will always be around just like gold ETFs are, but you only get this sort of like shining, like welcome to ETFs moment once where you break through. It's like an artist who has a first album that's a smash hit. You can definitely live on after that, but you only have that moment once, and we're in that moment. People should appreciate it. Well, the big difference is it's all happening in funds that aren't even 2 months old. That's crazy. That's unprecedented. What makes this unique is that it happened right off the bat. The only possible precedent is gold, but gold ETFs, it took them 3 years basically to get where we are now with the Bitcoin ETFs in 7 weeks. It's something like that. It's ballpark 3 to 7 weeks. And that is wild. And even if you take out GBTC's outflows, that number is accurate, by the way. If you add in GBTC, you get to 53 billion in assets. That, I think gold probably took 5-6 years to get there. So in fact, the Bitcoin ETFs are already, I think, like 55% as much as gold, right? So they're on a pace to pass gold like by July. This is crazy. I thought it would take 3, 4, 5 years. So everything, it's interesting. The fee war that happened in the 2 days before they launched, I always said that was like 2 years of fee war in 2 days. This has been like a year or two of flows and volume smashed into like 2 months. And it's interesting because I do find that time is different in crypto. And I almost feel like ETFs are getting sucked into the crypto time thing, like that planet on Interstellar where like 1 minute is like 2 years on Earth or whatever. I honestly feel like, what is happening here is almost more consistent with the way crypto moves than the way a typical ETF moves. So I think it's interesting, and that's another reason it's fascinating, is because these are two worlds colliding. It's TradFi and crypto, and they're each having an effect on each other. And I think one of the effects is everything's moving faster. And I think that one of the things that you see is the big platforms, we're going to take like 6 months to add them. But the fact that there's even rumors that they're going to add the ETFs on within 2 months, that's a good sign because it tells you that the gatekeepers are getting incoming phone calls from their advisors. And they don't want to look like idiots. You can't have an advisor in Kentucky who has a client saying, hey, can I buy IBIT? No, it's like almost like, and they're like, why? Well, daddy at the home office says I can't use it. It just, you look totally emasculated. It's just not good client service. So the fact they are going to maybe add them sooner is a good sign. So it looks like the demand was pretty grassroots. And we know that from the number of trades. The only thing that I'm a little surprised at is I think there's more retail action than I thought. I thought it would take longer because the advisors are less of them, but they come in bigger. But we've seen a ton of retail interest here. But I don't think this is GameStop ape retail. This is probably a more sober, normal retail, the kind of people who probably would buy an ARK or a thematic ETF. They're probably not first-time ETF users. So to me, this is a different kind of retail than the crypto people may assume retail is. They may just assume it's like the GameStop people. I don't think this is that crowd. I think this is a more heads-up retail. And I think these are people who might have been interested in Bitcoin, but just didn't want to go through the hassle of like getting it in all these other ways they could. And the ETF is such a known, trusted, easy thing for them. Just click buy, you got the trade on, and you don't have to worry about it. So I think the value proposition has really sort of carried the day for a lot of the flows. Yeah, so it's interesting, the spillover effect to the futures ETFs. I kind of thought that those would start to go down in interest because you can get the real deal with spot, why bother? I think what's going on here is that there's just, when you have something that's going up like, what was it, up 30% in 2 weeks? It was up like 6% a day. This stuff attracts all kinds of traders. This is just a fascinating, it's like bait. So you're going to get a lot of traders and a lot of arb going on between the futures, the Bitcoin futures, the spot. So I think some of the volume in the futures ETFs is people arbing between everything or using it to hedge. So it's not necessarily like somebody woke up and said, I want to go long Bitcoin, I'm going to buy BITO. So I think a lot of the volume in the spot Bitcoin ETFs is just trading between them and maybe even trading between exchanges. And basically, if anything is out of whack, someone's going to arb that now. So there's a lot of arb volume, but that's okay. That keeps all the prices in line. So no matter where you are, futures, ETFs, and exchange, you're probably going to get a good price for what Bitcoin is trading at because someone would have arbed any gaps. So this is the power of ARB and the ETF market makers. And I think that's a good portion of the volume. So when you have something that's in play like this, because 30% in 2 weeks, I think the Qs is flat and the S&P is flat. So stocks have been, they've been great, but not like this, right? So when you have something, you're going to attract all kinds of people getting into it. So the volume numbers, I think, show that. I don't think they'll sustain this kind of volume. I think over time, maybe one of them will. Like IBIT could end up trading like $1.5 billion a day forever. Fidelity probably comes down a little. Everybody else comes down a little when things settle down. But notice on the day that it went from 69 and then down to like 59 or whatever in one day, the volume was highest ever. When things are volatile, whether it's up or down, especially down, ETF volume goes up. So volatility actually creates more volume because traders get in there. Like I said, this is something really attractive to the trading crowd. Now, the fact that it went up to 69K, I think is interesting. It went down quickly. As somebody who just watches prices, it's weird how that happened personally because ETFs bought $1 billion that day. And I guess somebody said some guy from like 13 years ago, just decided to dump all his Bitcoin savings on one day, which I get. Like, if you hold a bunch of Bitcoin and you bought it a long time ago, I get the idea of maybe you're married or something and your wife's like, dude, you're sitting on like $7 million. We have to buy a house. Like at some point I could see people cashing out at these highs. So I could see this stunted, 2 steps forward, 1 step back, even if the ETFs are just consistent buyers. So that was an interesting thing for me to see. And the idea that it was this one person, this whale from way back when, it's just an interesting phenomenon, but it probably did need to take a breather. I mean, it was going up too quickly. Even in stocks, you see this. Usually it goes down for a quick day and then it regains its momentum. But the ETFs seem to be consistent buyers for the time being.
So there's Eric Balchunas' insights on the Bitcoin ETFs and their massive success. As he discussed, this surge in interest and volume in Bitcoin ETFs has been more intense and faster than anticipated, indicating a huge demand for these financial products amongst investors. He emphasizes that this influx of volume and flows has had a positive impact on Bitcoin's price, creating a bullish sentiment amongst investors. Balchunas also discussed the spillover effects to Bitcoin future ETFs, noting that despite the availability of spot trading, futures ETFs continue to attract traders and volume. Despite market volatility, Balchunas remains optimistic about the long-term prospects of Bitcoin ETFs, predicting sustained interest and volume. With all of that said, this is a great time for Bitcoin and its investors. With the successful launch and rapid growth of the Bitcoin ETFs, there's a renewed confidence in the cryptocurrency's potential as a valuable investment asset. As Bitcoin continues to make headlines and attract interest from both institutional and retail investors, it's clear that its importance in global finance will continue to grow through time.